Hi, this is Chris Reddick with Chris Reddick Financial Planning. In this blog post, I talk about investment alternatives in retirement to the TSP or the Thrift Savings Plan. All right, so what do we know about the TSP? TSP is a very low cost option for those in the military or federal civil service employees. Okay, so when you retire from the federal government, either from the military or as a civil service employee, you have a choice. What do you want to do with the money in your thrift savings plan or TSP? One option is to leave it in the TSP. Another option is to roll it into an IRA or individual retirement account, or you could roll it into a 401k, 403b if you're taking on another job after serving in government. All right, so in this blog post, I talk about how to evaluate the different index funds in the TSP. So what you have in the TSP is you have 5 different funds, essentially. Okay, so you have the C fund, which is basically the S&P 500, which is the largest capital-weighted stocks in the U.S. So you can think of it as the largest company by market share in the U.S. So it's basically the S&P 500, right? So what are the alternatives to the C fund? Well, the C fund, you could look at the iShares Core S&P 500 or the Vanguard S&P 500. There's lots of options of index funds that mirror the S&P 500. Now, what does an index fund do? It just tracks a benchmark. So it's not an actively managed fund, so the expenses are lower, just like the TSP. So the TSP is an index fund as well. So there's lots of funds out there, index funds that track the C fund, which is the S&P 500. And then the next fund is the S fund. So S stands for small, so small, medium-sized businesses. So we have the C fund, right, which is the largest companies, the largest 500 in the U.S. And then the S fund represents all other types of companies, and it mirrors the Dow Jones U.S. Completion Total Stock Market Index Fund. Okay, so essentially, what are these? These are companies that are small and medium focused, right? So you have the large focus with the S&P 500 and the C fund, and then you have smaller companies in the S fund. And now, why would you want to have a combination of C and S? Well, the C funds would represent larger, kind of more established funds, I suppose. And then the S funds would be growing companies, like small companies that perhaps will grow into larger companies in the future. So the next fund is the I fund. So I stands for international. So it's basically non-US stocks. Okay, so you have the C and S, which is US. Then the international, or I, is non-US. So what can you look at there? Well, the Vanguard FTSE Developed Markets ETF, or the iShares Core MSCI ETF. Okay, so those are possibilities that mirror that, and I talk about that in the blog post. The next is the fixed income portion of the TSP, or F. Okay, so what is the F? It's composed of bonds. So it could be like the Vanguard Total Bond Market Index or the iShares Core. Okay, so this is the F component of the TSP. And then the final one is a very unusual one, and it doesn't match most index funds. It's called a guaranteed fund, or G fund, right? So it's guaranteed not to lose money, and it's in short-term treasury index funds. But these are not guaranteed. So you could look at alternatives, but they're not guaranteed to the G fund. So the G fund's a very interesting fund that is not available in a kind of similar index fund. All right, so this blog post introduces you to the investment alternatives, to the TSP, and which is composed of these 5 funds, and then you can find alternative index funds, but as I mentioned, the G fund is not currently available, so it's very unique. All right, so reach out to me if you can be of service, and if you have any further questions. Have a great day.